Hello, this is Matt on the Moon Lambo channel, and I came across this rather interesting piece from AMB Crypto, and it's titled, Bitcoin vs. Tech Stocks. Who will be the, quote, huge winners? And I think it makes more sense to look at this from a perspective of just the entire asset class, the cryptocurrency asset class, but I think I know why they didn't, which I will highlight in just a moment here. But before we go any further, ladies and gentlemen, boys and girls, if you would please ever so delicately tap the like button, I would definitely appreciate the support, because if you do, it will tell the YouTube machine that you don't completely hate this particular Moon Lambo content, and then it will perhaps be suggested to more people that share your interest. And also go ahead and subscribe to the Moon Lambo channel, because if you don't, well, gosh darn it, that just hurts my feelings, and I'm a weak individual. All right, let's dive in now. And here's the first sentence, and to be honest with you, I read this first sentence maybe 5 times before realizing that it could have been written better, and you could interpret this first sentence a few different ways. So I'll tell you the way I interpreted it, and then you can tell me in the comment section below if I'm just being a little Moon Lambo idiot stick and not thinking through it properly. But here's the sentence. As a financial tool, Bitcoin has no competitor, but as an asset class, it has many. So again, I was like, wait, what? Who? Bitcoin, no competitor, what? And so my final conclusion, and this is my very best guess here, is that I suspect, my final suspicion, that's a better way to word it, is that I think that they're stating that there's no cryptocurrency competitor to Bitcoin, which is just flat out incorrect, but I think that's what they meant. But there are other asset classes that are competing against Bitcoin, and this is why, like, the topic of the article, it's a legitimately interesting concept, and there's actually a lot to say, especially as it pertains to us as XRP holders. It applies to Bitcoin, but I think the reality of the situation for the crypto asset class, as great as what's going to happen will be for Bitcoin holders, I believe it will be that on steroids for XRP holders. That's my humble opinion. Now, I do want to be clear. I don't have a financial background, and I am not offering financial advice, so you absolutely should not buy or sell anything because of me. I'm just your everyday Joe Schmo, happy to talk about this stuff, but that's purely because it's a fun thing to talk about. It's a strong interest for me, and I like making YouTube videos. So that is it. Moving on with the piece, though. The obvious one is gold. So we're talking about a competitive asset class. But the more modern-day equivalent is the asset class of technology stocks. From the lows of the March 2020 financial crash, few assets have recouped their losses. While Bitcoin is up nearly 200%, tech stocks have also seen bullish swings. The NASDAQ composite is up by 56%, Facebook by 77%, Amazon by 95%, Apple by 112%, and then parentheses writes, it had a stock split in August 2020, Netflix by 77%, and Alphabet by 48%. Now, these were the big winners of the crash, but undoubtedly, Bitcoin saw bigger gains, and yet there isn't more hype around investing in the cryptocurrency. And so, yeah, and it's true for XRP too, certainly. If you're talking about, especially you're comparing like specifically to the bottom when this crash happened, well, gosh, XRP got down to like, what, 10 or 11 cents, depending on the exchange that you're talking about. And then the today, what is it now? Actually, I didn't check before recording. Is it like 25 cents now? 24, 25 cents? It's up substantially comparatively. And the whole world was freaking out. It wasn't just about XRP, obviously. It's not like XRP was a bad boy or girl and did something bad and people punished it by selling. It was just moving in tandem with the rest of the crypto asset class, which moved down along with the stock market here. Even so, while like they're stating here, many stocks really haven't performed as well, the technology ones undeniably have. It's like people recognize these things are not going away, but as far as massive returns, the fun question for me, and we're going to get into it, is like, where's the real opportunity? Like, to what degree is there opportunity remaining for these stocks? Is it particularly notable, or is it going to be better for Bitcoin and XRP and some other cryptocurrencies? Well, spoiler alert, it's going to be cryptocurrencies. That's my firm belief, which is not financial advice, but I firmly believe that the crypto asset class is going to outperform the stock market at large over, pick your period of time, 5 years, 10 years, 15, probably 20. I mean, I don't know when things are going to start to change here, but the markets are so illiquid. I can't imagine that not being the case. But anyway, the piece continues here. Yeah, here we go. While institutional investors like MicroStrategy, Square, and Paul Tudor Jones have turned bullish on the digital asset, retail investors are still wary and are opting for lower performing, but valuable nonetheless, tech stocks. Why? In an interview with AMB Crypto, Nick from eCoinMetrics gave 3 reasons for this outperformance of tech stocks against Bitcoin on the retail front. And here, and I'm going to share with you my opinion too, but check this out. Number 1, passivity. Owing to the massive capitalization of the aforementioned companies, tech stocks see higher passive flow, said Nick. What he meant by this was because companies like Apple, Alphabet, Netflix, Facebook, Amazon, and Microsoft take the top spots on the S&P 500, they receive investment through various index and large cap funds. And he said, quote, the FAANG, and so again, that would be Facebook. FAANG it's short for Facebook, Amazon, Apple, Netflix, and Google. And you can argue about which A is which. Is the first A Amazon? Is the first A Apple? Duke it out, man. But anyway, here's the quote. The FAANG are already a huge part of the indices that are used for passive investing. Take Apple alone, it is about 6.5% of the whole S&P 500. That, in turn, is pushing their market price higher. So basically what they're saying is, if you're going to invest in an index fund, there are much higher odds that these particular companies are going to be in them, and so that would be one of the reasons that you'd see the biggest returns on those compared to the other stocks. Let me go a little bit lower here. Actually, you know what? I want to say something on that before we move on. I don't want to forget this. Mike Saylor, he's the CEO of MicroStrategy. That's the company that recently invested $425 million in Bitcoin, which I say bravo, heading down the right path here. I think that there are going to be a lot of other publicly traded and private companies also that will be investing into the cryptocurrency asset class. And I think not just Bitcoin. We'll not be surprised if XRP becomes a piece of this ultimately. But if you've got excess funds on the balance sheet and you know what inflation does to eat away at the actual purchasing power of those funds, well, you got to park it somewhere. And there are a number of reasons that diversification for companies, and not just institutional investors, but companies, publicly traded companies, makes sense. To me, it just seems obvious. And you're going to see increased confidence in this concept the more time passes, because eventually it just becomes undeniable. Wait a minute, 30 years have now passed and the asset class exists. Well, can we finally acknowledge that? Like, how much time has to pass before we can just be like, yes, it's still here because there's something to it. And if you haven't figured out why yet, you're the problem. All right, you are the person that has not yet figured this all out right now. And so one of the things that Mike Saylor, again, the CEO of MicroStrategy, said in a recent interview was that, and he was calling for this. When he was talking about the FAANG stocks in, I think he said 2011, right around there, maybe 2010. I think he said 2011. And he said, look, these are undervalued stocks. These are going to be worth tremendously more in the future than they are today. And so, he certainly threw a chunk of money into them. And you fast forward a decade, and spot on. He was looking for something, in a nutshell, that was, if anything, undervalued from where he thought it would be reasonable to be valued at the time. He thought, okay, this looks cheap right now, right? In speaking about that today, so you saw the pretty quick rebound for those particular stocks, as I cited the percentages a little bit earlier in the video just a few minutes ago. So yeah, they rebounded, so great, good for them. But in terms of the longer-term potential with these particular most famous of stocks on the planet, what is the true return potential moving forward? Well, and here's the thing, and Mike Saylor pointed this out too, and I've talked about this on my channel like ad nauseum to this point. It's like it's the fact that there's so much money in them at this point that it's like a crazy amount more will have to flow in to get them to double. Now, if you look at the cryptocurrency asset class, you can find cryptocurrencies, undoubtedly some of which will be here, 5, 10, 15, 20, 30, 50 years from now, that are worth almost nothing today. And so the opportunity for that type of multiplier effect is notable and tremendous. And so I'm not saying that there's not opportunity for FAANG, and that's not the purpose of this video. I'm not making that claim at all. I'm just saying that the opportunity for the multiplier effect in investing, for my humble opinion, is not the same. Okay, like the real opportunity would be in the crypto asset class. So I'd rather have, if I had to pick, I'd rather pick, if I had to invest in one of those stocks or Bitcoin, I'd pick Bitcoin. I would pick Bitcoin. And if I could just pick any cryptocurrency in the asset class, and I had to hold it for, say, a decade even, okay, yeah, put that requirement on it, because that makes, I think by 10 years from now, hopefully, fundamentals are going to matter. In that case, I'd say XRP. I'd always, look, even outside of that, because I acknowledge right now XRP's following the price action of Bitcoin, still, my gosh, there's so much less money in XRP. It's going to have a way greater opportunity, in my humble opinion, for this huge multiplier effect. Because you can think right now, just to get back to its all-time high, it's got to increase by like 15 or 16-fold, somewhere thereabout. And do we really think that's never going to happen? And so it's like, imagine a machine where you can put in $1 and it shoots out $15 eventually. Because again, I don't know what the timeline's going to look like, and there's technically no guarantee. I get it. But I personally believe that it will happen at some point. And so now imagine you put in 1,000. Ooh, I get 15,000. And this is just to get back to the all-time high, 15,000 back. Or what if you put in more? And more and more. And so that's why there's this opportunity, and there's a strong recognition, because we've seen this play out over the last decade. What investment could make you wealthy the fastest? Well, it's got to be something in the world of crypto, right? But they proceed here. There are a couple of other reasons that they cite as well. Stimulus, and I'm going to be brief with these, because that was the most interesting one in my humble opinion, because again, a huge point being, yeah, there's all sorts of opportunity in the stock market. Presumably the FAANG stocks will keep doing well. That really is not the purpose of this video. It's more like, where can you put money to get the most bang for your buck? Because that is an interesting concept to me. XRP. Well, just an opinion, unprofessional opinion. Don't buy or sell against me. I'm happy to be transparent, though. Stimulus. Since we're speaking specifically about the U.S. and about U.S. technology companies, the stimulus package cannot be ignored. Over and above the monetary stimulus, the fiscal stimulus of $1,200 to every citizen would have been funneled into stocks over bonds and commodities, said Nick. Because of a lack of awareness, apart from the top few companies, which are all technology-driven, there is no emphasis on investing. And he added, quote, certainly on the retail side, the stimulus money has helped push those stocks higher. People who are new to trading probably know the name of a handful of stocks, and my guess is that they tend to be the biggest ones: Apple, Tesla, Netflix, and so on. That seems like a reasonable point to me. I don't really have any dispute with that whatsoever. And then the third reason, fractions. Finally, there is this notion among retail investors that Bitcoin is an expensive investment, not a risky one or a complicated one, but an expensive one. Why an expensive one? Because retail investors are not educated about the fractional purchase of Bitcoin, said Nick. They think that just like you can't buy 25% of an Apple stock, you can't buy 0.5 Bitcoin. But the fractional purchase of Bitcoin, or the process of stacking sats, is one of the inherent benefits of the cryptocurrency world, allowing both immediate purchase and instant transfer. And I will admit, before I knew a damn thing, reasonably speaking, about Bitcoin, I mean, I think at this point I'd seen like a documentary perhaps on Netflix or somewhere streaming. I watched something, and they were talking about the price of Bitcoin, what it was at the time, and I can't remember if it was a few, 1, 2, 3,000. I really don't recall, but whatever it was, I remember thinking, because it wasn't discussed in the particular documentary I watched. I was like, that sounds like bigger than most people would be willing to spend to jump in. And it wasn't explained, and I hadn't done any additional research. That was just the only information I had, and that crossed my mind. Certainly. So I think it's reasonable to suspect that without any additional information. Like, wait a minute. So you're talking about Bitcoin getting up to today, whether it's 11 or 12,000, whatever it is, right? This again, I didn't check the price before recording the video. Whatever it is, though, the point is, it's like I can understand why somebody that hasn't done any research is like, that sounds kind of expensive to jump into. I felt the same way. I totally get it. You have to do research though, which is why that matters. But anyway, here's a quote from him. For Bitcoin, we still need to educate the retail investors about fractional purchase. Very often I hear retail investors complain that Bitcoin is too expensive, and that's because they don't realize they do not have to buy one whole coin. This is where the idea of stacking sats is important. Totally valid point. Anyway, that's it for this video, though. Thank you for stopping by, my friends. Would love to hear from you in the comments section below. Love diversity of thought, so tell me what I got right and or wrong. But I'm not a financial advisor. Do not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo!